What is going on, investors? Hopefully guys are doing well out there. That is right. It is Friday. It is time for the weekend, and it's time for the Faang Stock Recap Show here on the Investor Channel, where every Friday we recap all the major news and the technical chart patterns from all the major Faang stocks. And this week we wrapped up earnings for everybody outside of NVIDIA, as Apple reported their earnings yesterday. We'll get to that in a moment, but we kick things off like we always do with Meta Platforms. Start the week at 238. This one hit a very interesting technical level. You want to stick around towards the end of the show when we get to that, but slid down about 2.5%. Meta Platforms finished the week at about 232. The company swung to a decline as the FTC is moving to prohibit monetizing youth data. So we'll see what ends up happening here. I believe Meta's response to this is the FTC doesn't have the authority to do this. This would need to be an act of Congress or some kind of law. We'll see what ends up happening here. But if Meta can't monetize youth data, they can't monetize that set of users on its platform, probably would actually be tangible to the stock in the shorter term. Now, Meta Platforms reportedly headed back to the bond market. Remember, they did this just a couple of months ago, I think, for a $10 billion raise. This time, they're looking for about $7 billion. Very interesting, because most of you probably followed the Meta Platforms earnings video that we did just a couple of weeks ago, and the company has plenty of cash flow. They have plenty of profits. They have plenty of cash. So the fact that they're tapping the bond market for $7 billion is very interesting. On top of that, the FTC and the DOJ not allowing this company to really consolidate other businesses and do acquisitions. So we'll see what they end up using this $7 billion for. Now, the company is hiring an AI chip team. Who isn't, as they move to divest from customer app as well. You are going to see these headlines cross from all these major mega cap companies over the next 12 months or so. Amazon, Meta, Apple, certainly NVIDIA, which has a pole position when it comes to these AI chips, Google, Microsoft as well, going to be largely investing in this, as these machine learning and these data center chips, these are specialized things. And if you have the money and the R&D that these companies have, and then you go partner up with a TSMC, well, there's going to be a lot of competition out there, in my opinion, when it comes to the incumbents that you have with NVIDIA, AMD, Intel as well. The company separately divested away from a customer acquisition that they made for about $250 million, or that's what the company was valued at. They still have a majority stake in Customer, which is essentially like a kind of a CRM or a customer relationship management. I thought they would integrate it maybe into WhatsApp or maybe the back end of the business side of Instagram, since there's a lot of commerce that goes on there, and a lot of people do business on WhatsApp and through Instagram DMs or maybe even Messenger, and there's no way to really like segment out that data. It would be interesting to have a powerful tool behind there, but it looks like the company is moving in another direction. Moving on to Apple, start of the week at 169, up nearly 2.5% to finish the week at 173. That includes a massive 4.7% rise on earnings yesterday after the bell. The company raised its dividend by 4.3% and plans another $90 billion share buyback, as the company's earnings have really screeched to a halt. But I tell you what, you raise your dividend 4.3% and you got this massive stock buyback. It's probably enough to keep the shares at least in a pole position. Also, Apple, very interesting point from a technical perspective. We'll talk about that when we get to that segment of the show. The company surged on iPhone results, seen as, quote, impressive, but many are still wondering about the outlook when it comes to Apple, as their growth rate has shriveled up to either a negative or a very low single digits. Now, obviously, when you're doing $80-90 billion of revenue in a quarter, low single digit revenue growth is still a rather impressive, but the questions have to remain when you're looking at a company with a forward price to earnings ratio near 30. When is the growth rate coming back for Apple, or are they just going to be buying back the shares to maintain the level the stock is at? Now, Apple's partner in Foxconn maybe gave you a little bit of clue in the upcoming quarter, as they said that their April sales rebounded, led by smart devices, which you'd have to imagine the bulk of those happened to be Apple. Their revenue, and I'm talking about Foxconn, rose 7.2% in March again, aided by those sales of the smartphones. Now, Taiwan Semiconductor, which obviously supplies all of Apple's chips for all of their devices, is said to be discussing an $11 billion German plant with its partners. Now, this isn't going to lower the cost. This isn't going to drive down cost of goods sold because obviously you make these chips in other parts of the world. A lot of time, what a lot of people don't understand too is maybe you open these fabs here. TSM opens a fab in Arizona and you make chips. And now, my understanding, they're not going to be making the advanced chips, but maybe some of these goes into a phone or an iPad or something like that. Well, that iPad is not going to be manufactured here in the United States. So you're going to make the chip here in America. You're going to send it to China or India, wherever you happen to make that. And then you're going to ship the finished goods back to here. That is going to increase cost of goods sold, not decrease them, but it does diversify the supply chain, needless to say. Now, Apple is cutting its drivers in its California autonomous vehicle testing program. The company had 145 drivers in its program. As of April 28, that was down from 201 in March. This is citing California DMV data. However, the company's fleet of cars is down just one to 66 cars. Again, this seems like it's in the work, but we're still miles away, if you will, of anything coming from Apple. Moving on to Amazon, started the week at we'll just call that 104, drifted up slightly, about 1.6% to finish the week, just over $105 per share. Now, AWS may have saw a slowdown when they reported earnings just a week or so ago, but it is a, quote, largely untapped $2.5 trillion market. The company believes, this according to analysts, that the public cloud opportunity for Amazon is $2.5 trillion as Amazon has a pole position already in the cloud business. The other thing that you have to think about in cloud is Microsoft has really kind of gone in bed with OpenAI, and Google's obviously got its own thing. And so if you're trying to compete with OpenAI, do you really want to go to Azure? If you're trying to compete with Google and Microsoft when it comes to AI, do you really want to host your product in your service on their servers? Or maybe you go to somebody that is viewed, at least at the current time, maybe slightly more neutral, and that is AWS, and that is the thought process that a lot of startups will probably choose AWS. Moving on to Netflix, start of the week at $328. This one's continuing to drift downwards, down about 1.6% to finish the week at $322. Hollywood writers are striking for the very first time since 2007. They have all important streaming in focus. And here's the problem with the writers. And look, I think the writers do a great job. And I think in some cases over the next 5 to 10 years, some of their work is going to be replaced by AI computers and things like that. Maybe not replaced, but certainly enhanced. But here's the problem is the streaming business absolutely sucks. The only company that makes money as a pure play in the streaming service, Disney doesn't make money streaming. Paramount, as we'll show you, doesn't make money. Like, nobody makes money streaming. Netflix is the only company. And so if you're striking to get more money, that it's just simply not there. You saw Paramount Global stock go down 25% after reporting earnings that were just a straight disaster. Stock rebounded a little bit, but it's sitting at 16 and change, and it has many people asking if that company is going to look for a strategic partner. WBD, which spun out from AT&T, has just been heading downwards. The Walt Disney Company has lots of things going on, but that stock also literally has not gone anywhere in over a year. I wish the writers luck, but my guess is there's just not a lot of profits when it comes to the streaming business. Moving on to NVIDIA, and this stock continues to move higher. This stock started the week at, we'll call it 281, finished the week up over 2%, finished the week very close to $287 per share. NVIDIA hit a one-year high. You'll certainly see that on the technical chart when we get to that, as positive AI sentiment continues to be abound. And look, NVIDIA right now, right this second, is the absolute clear-cut winner when it comes to AI. We'll get a view on what that translates into financials in about 19 days when the company reports their earnings on May 24th. But here's the thing. When you start looking forward 12 months, 24 months, they may not have that dominant position. AMD's knocking on the door. Shoot, even Intel's knocking on the door with some things. And then obviously Amazon, Google, and Meta are going to be pouring lots of money into this and using alternatives that ultimately compete with NVIDIA. Moving on to Google, started the week at 107, down about 1.4%. Finished the week close to 105. The company confirmed its first foldable phone on the way. And I actually like this, okay? You're not going to be able to compete with the iPhone. Anybody that wants the, quote, highest end iPhone or already in the Apple ecosystem, probably not. I mean, we're talking about fractions of percentage of people that would transfer over to Google. But if you start offering a differentiating product, one that folds, one that does something just different, this is a way to capture market share. I also saw an article that wasn't cited here, but was on a separate piece of data that actually the Gen Z, which I think is kids probably in high school and maybe early college, they actually like the foldable phones. They like the flip phones. They like that form factor. And so this could be a play at getting younger audiences to try your phone. Moving on to Microsoft, started the week at 307, up a percent to finish the week at 310. The company surged as it said it was going to help finance an AI chip push with AMD, and that was AMD stock that surged. AMD announced earnings, and the stock actually did a straight U-turn. It was up here at about $88 per share, dropped down into the 70s, and then boop, this press release got put out, and the stock did a U-turn as Microsoft helping the company potentially develop an AI chip that is likely going to be released very soon. However, a Microsoft spokesperson denied any involvement in the AI chip, but oftentimes, similar to politicians, whatever a spokesperson of a company says might not actually be the truth. Microsoft Teams will let a small business charge for virtual meetings as more. So if you have like a webinar or you want to, like, let's just say I want to do a video one day and I want to charge everybody $5 or something to view it. It looks like I'm going to be able to maybe use something like Teams and have that whole platform. And then maybe you want to have like a conference or something like that. And you want to like actually charge for it. It looks like there's going to be a revenue model here. You're going to be able to use GoDaddy's payment services and other payment services like PayPal and Stripe to charge people to view the webinar and view the meeting. I think that's interesting. Look, we're looking at, a $2.2 trillion company. Is not necessarily going to move the needle, but it creates a interesting product for Microsoft. Moving on to Tesla, started the week at 161 and kind of sneaky. Went up over 5% to finish the week at about $170 after the company increased their prices in the United States, China, Japan, and other region. This was on all models, the Model Y, 3, S, and X, the entire sexy lineup, getting a little bit of a price increase. This was like hundreds of dollars, at least that's what I saw. And again, this all comes from, if you listen to the Tesla conference call, which they had maybe 2 or 3 weeks ago, Elon Musk talked about how the executives every single day, the executives of Tesla gets an email, and it lays out just 2 very simple numbers: the number of cars that they produced and the number of cars that they sold. And what they do, I don't think they have an algorithm quite yet. I'm sure they're being aided by computers to a certain degree, but they're adjusting prices on the fly based on that data. And look, if Ford had that real-time data and GM had real-time data, all these companies had real-time data, they would literally be doing the same thing as Tesla, moving prices up or down on a daily basis. I would say in just a couple of months, we probably won't even be reporting on Tesla's price movements. It won't even make the news because it's just something that they do all the time. Now, moving over to the technical segment of the show, the S&P 500 didn't quite confirm. We would have liked to see it get above these highs that we made back in February. That's right on 4,200, but it's close enough. Technicals don't have to be perfect. A perfect technical pattern would have taken you there. The market could continue to push higher next week. The financial sector, energy sector, kind of keeping a lid on the broader market, but obviously, as we'll go through the tech sector, very strong earnings, strong guidance, and obviously strong buybacks as well. We're monitoring the S&P 500. A breakdown from here is not alarming until you get below the lows that we made back in March. You get below 3,800 on the S&P 500, and that looks like a topping pattern, and it looks like potentially retesting the lows. We'll see what happens going forward. Now, Meta made the most interesting technical move of the week, and we've been talking about it for a really long time here on the channel. This red line, which I will now change to, let's just change it to a purple line since I will be going to the Lakers game tomorrow. It was support for the longest time for the stock during 2020 and 2021. And interesting enough, the initial gap down when Mark went on his metaverse quest, that gap down was right here at 245. So notice what happened to the stock this week. Hit its head on 245, right on the dot, and pulled back. Now, that doesn't necessarily mean things are going to continue to move in this direction. You should have some support shortly under the stock at about 218. If you blow by that level, I think we've got a shot at closing this gap down here. That would be my first area where I'm excited about Meta. And it looks like a mile away at 160. But look, the markets have been volatile to the downside. They've been volatile to the upside. It wouldn't surprise me if the back half of the year is actually very volatile and that we have big swings back down in a lot of these names. The other scenario is the one that I've talked about on the Meta call. You get above 250 on this one. I'm playing the momentum gap. We close this momentum gap from 250 back up to 280, and you play kind of a shorter term trade there if you want to. Moving on to Apple, also very interesting from a technical perspective. We talked about, we had some highs that were right here. Now that is the top candle. All intensive purposes, Apple closed above these highs that we made back in August of 2022. Technically, that essentially takes away kind of the lower highs. It's not quite there yet. I'd probably like to see technically one more candle, one more close Monday or Tuesday of next week. You can hover up here or close up here. That is a good sign. Look, if you are a profit taker, you're somebody that likes to maybe sell some of the stocks at highs and maybe diversify into another portion of your portfolio or other sectors that are beaten down. This is your time, okay? These are your selling moments when you get to these highs. Now, that's not to say that we don't continue to rally. This one could rally up very, very high. In fact, once you get above these all-time highs back at 180, there will definitely be an absence of sellers, and there'll be kind of a rush into this type of stock. So we could still have another 10, 15, maybe $20 of upside in these shares. But if you like to take profit, these are the areas where you tend to do it. Now, moving on to Amazon, nothing really exciting from Amazon. It's just moving up this kind of red trend line that we have in here. We've certainly busted out of our downward channel, and we're making our way up. If Amazon would get on the press release train when it comes to AI, I think we could come up here to 140, which would be another 35% move on the stock. Moving on to Netflix, failed to make new highs, really failed to confirm new highs. You would have liked to seen this stock on its latest move get up into the 390s. It failed to do that. Now, the area you're really looking at are the lows that you made back in March at about 287 or so. You wouldn't want to see this stock get below 287. Although if you're trying to accumulate this stock, that's exactly what you want to see. Keep in mind, over time, we're kind of converging. This green line is not great, but for the most part, broadly, okay, ever since kind of the major dump in Netflix, you're making a series of lows, higher lows, higher highs, higher lows, higher highs. The fact that the company didn't confirm that this week or over the last couple of weeks, not overly concerning. A resumption of this uptrend certainly still possible. We'll keep a close eye on that. Moving on to NVIDIA, talking about parabolic. This stock absolutely has. Now, technically, has it broken through this uptrend and it's starting to flag sideways? Yes, a little bit, but we've hit a very logical area of resistance. This 280-ish level was some support here. It was some resistance here. The fact it's proving as resistance here, very understandable. The fact that this company wants to set up towards the top end of a resistance as you're just 19 days away from hearing earnings, also understandable. I think you're likely to have a large pullback in this stock at some point. Those will be buying opportunities when they occur. Moving on to Google, just flagging out here at the top of the channel. Talked about it several times. This red line is a very hard line in the sand. You have a lot of consolidation both above and below the 105 level. For this stock to really push through it, you need, first of all, probably broader market, but probably more specifically to Google, some kind of fundamental news, some kind of data, some kind of press release, something to push the stock up into the 110 area. Otherwise, you get some kind of pullback in this one, and those pullbacks can be bought. Anything south of 100, I think, for Google can be bought. Moving on to Microsoft. This one continues its parabolic move upwards, very much at a logical area as well from a resistance standpoint. There's some area here at 310 where the stock has gotten rejected. Looks like to me this one could easily push into the 320 range. Then you come into essentially the all-time highs, very similar position that Apple is in. And also very much, if you're an older person, if you were going to use this money to buy a house, you want to diversify into something, you want to buy something, you want to just cash out and feel good about it, you are also approaching that rate. You're there with NVIDIA. You're there with Apple. You're there probably with Meta as well. These are the areas where you don't have to sell your whole position, but if you want to risk manage a little bit and take profits, these are the times to do it because, again, the data that we're seeing, we don't have to get into a whole macro discussion. The data we're seeing, makes me feel like we're going to have one of these come at some point for the rest of the year. We're going to have this massive pull down, maybe not on all these stocks, but at some point we're going to have this give back, and it will probably, based on these large moves that we made up, the give back is probably going to be pretty good. Now, speaking of give back, the stock that already gave it back was Tesla. It is in the most funky level from a technical perspective. There is a magnet towards the stock at, we'll call it 170 up to 200 until you decisively kind of break down below that or really push higher. You really want to get this one probably up over 225, 230. It is just kind of an equal fight right now between the bulls and the bears, and Tesla just kind of sitting in the middle of that range. Obviously, a company that could release a press release or do something fundamentally that changes the price action will certainly be here to cover it for you on the channel. That was the Faang Stock Recap Show for Friday. We'll be back again next week. Be safe this week. Go Lakers, and good luck with your investments.